So the budget as a whole is still a proposal for laws to be implemented, passed and implemented by government. As it stands at the moment, the proposal is a VAT increase, less than what we initially thought. In our previous video, we had spoken about a 2% increase. Now they're speaking about a 0.5% this year and a 0.5% next year. So that's one of the proposals that still needs to be considered, and it is one of the proposals that's currently in dispute. And there's a lot of questions around whether this VAT increase will actually be passed. Another tax consequence, especially in the property space, that people need to be aware of, but this applies throughout South Africa, is the individual tax rates. So the brackets for the individual tax rates haven't been adjusted for inflation. What this means is, even if you earn more and you begin earning more this year, the tax brackets haven't been adjusted, meaning that you might actually be pushed into a higher tax bracket, and you will, as a result, pay higher tax for the salary that you're earning because of the bracket that you're now in, because it hasn't been properly adjusted. So that's kind of one of those hidden taxes that people aren't always aware of, but it has been spoken about quite a bit. How this impacts property investors, bear in mind that if you own property in your personal name, your individual tax rates also get taken into account when it comes to capital gains tax. So now it is a consideration to a certain degree from a capital gains perspective, what tax bracket you fall under. But yes, it hasn't been adjusted. So that is going to increase treasury revenue. And then the last thing to bear in mind is the threshold for transfer duty has been adjusted. That is a relief. So it has been increased, meaning that you will not pay transfer duty as soon as you used to in the past, because that threshold has increased from 1.1 million by 10% to 1.21 million. Now, obviously, this is all debatable on whether these laws are going to be passed. Most people agree that the tax bracket, the non-shifting of the tax bracket and the transfer duty threshold increase will continue as proposed. However, the VAT increase is still in question. Unfortunately, if you do follow some of the economists, it's going to be very difficult to not pass the VAT increase, because then they will have to go back to the drawing board and figure out how they're going to adjust this deficit, especially considering then taking out more loans as South Africa is going to hurt us more. There has to be some kind of fine balance between I guess the lesser of two evils, as it were. How does the VAT increase impact us? We did speak about this in the previous video. Same concept though, 0.5 or 2%. The impact is still the same. So as a property owner, developer, depending on the type of property that you're buying, commercial properties, now you're going to pay more VAT, but your input tax would also be higher. Residential properties are VAT exempt. So a higher VAT rate will impact the owner in the sense that now all the expenses pertaining to the property will be more, but you will not be able to recover this as input. So that's just something to bear in mind. Commercial properties, obviously you own the property, you charge VAT, and you claim your input. So that will have relatively low impact. At the end of the day, it's the end user that will have to cover this. Just something in general so everyone knows, the zero rating, so the basket on where VAT isn't going to apply has been increased, and that's in the hope of offering some relief to lower income households. But as it stands at the moment, those are the primary implications. There are others, but those are the ones that are going to generate the biggest revenue for Treasury, and that's how each of them will impact the property space.